Certainly not for the faint of heart. I mean, the markets have been, choppy, and we expect them to remain volatile. But I think by and large, particularly the regional banks are just well positioned, against the current backdrop. Clearly, deposits are moving, and they're kind of moving up, kind of market cap. And we think, over time, certainly regional banks, some of them, particularly the more healthy ones, are in a position to capitalize.
Jason, Sarah mentioned the earnings multiple that's being assigned to some of these banks right now. We know that you and many other investors and analysts cover it from a book perspective, a book value perspective. Many of these now regional banks are trading at deeper discounts to their tangible book value, the carrying costs of their assets on the books. Are there names? Should we be looking at some of those deep discounts to book value? And where exactly would they then be in those regional type banks?
Yeah, no, certainly. If you look, even on price to earnings that are relative to the market, you're at levels, I don't think we've seen before. And I've been doing this 27 and a half years. So certainly you're kind of discounted, on book as well. The banks are trading, call it, 1.3 times tangible book, closer to book value to just for, AOCI. Historically, this group trades closer to, 2 times tangible book. So clearly the market, is a lot of negativity is priced in. When we look at the coverage overall, clearly the biggest banks, whether it's JP Morgan, Bank of America, are certainly capitalizing in the current environment. If you look to the regionals, we think like names like a Fifth Third or a Citizens, that have been sold off particularly hard, yet have relatively clean balance sheets, could be in position to kind of capitalize against the current landscape.
And before we let you go, Jason, these regional banks that have seen the biggest hits, we're talking about the West Coast, kind of more Silicon Valley epicenter type banks like, PacWest, like Western Alliance, like First Republic. Would you be going into those right now, or are you better off waiting for a little bit for the dust to settle?
Clearly not for the faint of heart. I mean, there's certainly been some anecdotal evidence that deposit balances are stabilizing. But, we're kind of cautious a few days, don't necessarily make a trend. So certainly kind of, keep an eye on it. But, you're going to see, I think, a fair amount of volatility over the coming weeks. We got a green screen today, but I don't think that necessarily portends, it can continue every day until we kind of get further along, until figuring it out, who's where and, who's better positioned for the current backdrop.
Really quickly, Jason, I know we have to go, but let's say First Republic doesn't make it through, I don't know, the day, the week. Let's say a buyer doesn't step in for it. What happens? Is the government going to have to make whole the $30 billion of uninsured deposits that it got from JP Morgan and Morgan Stanley and some of the other more solid banks? What does that look like?
Yeah, no, it's certainly obviously a situation we're watching very carefully. And I think, the biggest bank stepping up and putting $30 billion in that late last week, I think was a sign of confidence that they have the thought that First Republic can manage through this. They're kind of certainly, kind of meeting customers' demands. There was anecdotal evidence that deposit balances did start to stabilize on Friday, after the biggest banks made that injection. So clearly this is a very important week for the company, and it's something we'll continue to keep an eye on.